So for FA, that's your last. So I'll take us back a little bit for better understanding. So this is Adeyemi that we did last week. So I'll do one or two. I'm not sure. Hold on, please. I'm trying to share. So this is Adeyemi. So I'll just do one or two practices with this question. I'll just do one or two posting. So after posting, then you guys should be fine. Okay. Okay. So now for okay. So let's go back to Adeyemi. So Ade, I guess, please, are we together? Can you just let me know? Can react? Are we together, please? Okay, thank you. So for Adeyemi introduced cash, 30,000 naira cash as capital. So now we said that this is cash is coming. This is the person introduced cash. So to the business. So capital is increasing, cash is increasing. So we debit our cash account, right? So cash accounts now, this is what I said you're going to do. So you debit your cash accounts with how much? 30,000 naira. Right. So another thing you're going to be doing is, I hope this will not be, yeah. So you open what? Capital account. So you might be seeing something like this. AC means accounts in financial accounting. So we said that we are crediting our capital account. So with what our details will be what? Cash, right? 30,000. That's that. So the next one is that I will not do transactions because we've done it the last class. Okay, yes, I can use that one too. So now Adeyemi borrows loan 40,000. So he borrows now. So we said that we are going to do what? We are going to debit cash because cash is coming in a borrowed. So we are debiting cash 40,000 and we are crediting loan. So what I'm trying to explain is that you will not open another cash account. It is still the same account that you have opened before that you're still going to maintain. It's just that you will post another thing into that account. Assuming we have another capital, assuming Adeyemi introduce another capital now. So what will happen here is that you are going to still maintain this capital account. But what happened here is that he borrows loan. So cash is coming in. So in this cash account now, you just enter your loan as another details. Do you get? So this is another detail. What this one is telling us that we have another thing in this cash account, which is what? Loan. Loan of how much? 40,000, right? Loan of 40,000. Then you are going to open what? You open loan account. Sorry. So let me just do it by pulse of my. So you are going to open your loan account like that. Yeah. So loan account. So we say loan account is the liability. So we are crediting it with cash. Cash of 40,000. So I hope I'm clear now. So that is what I'm trying to say the other time. Then for the one that might What other things do I need to explain? Okay, the balancing of the accounts, right? So for the balancing of the accounts, I said that if this is the only thing that we have in this side now, I guess I guess that is clear that day. Yeah, I guess we've done it, so it is clear, right? So I would like to ask, are we all fine with rebalancing our accounts? Did you understand it? Is anyone here that don't understand how to balance a ledger account? So if you don't know how to balance up your accounts, you don't understand the balance carried down, that which is balance CD. If you don't understand balance brought down, which is balance BD, please signify now so I can explain before we move to trial balance. So is there anyone that don't understand? Okay, then okay. Debbie, do you have question? You can ask your question. Or is it that you don't understand? Okay, for Debbie, should I assume that you don't understand? That's why you raise your hand, right? Okay, thank you. So for balancing of the account now, I'm going to consider this. Okay, nice. Come in, please. Okay. You want to see? You want to see? It's Jesus that I. So for toasting, oh, sorry for Debbie. My goodness, you know when you're thinking, sir. I'm trying to share this. I'm sorry, please hold on. So for purchases account, I hope you are with me, Debbie. So for purchases accounts now, look at this. I said the difference between debit and credit. It is what is called balance CD. That is what we call balance CD. Then it is your balance CD. This balance CD they are going to bring down. It is called balance brought down. Did you get? Please, you can unmute your mic if you don't understand. I don't know how to handle this thing very well. So I said that your balance CD now is 18,500. The difference between debit side and credit side is 18,500. Then the total balance for purchases account is 20,500. So after balancing this account, we said we have the difference of 18,500. So we have closed our account. I said in your notes, close your account. Once you've gotten the total distance, then you roll it with what? Sole line, meaning that you have closed your account. Then after closing the account at the end of the year, you are letting us know that okay, you have to bring this difference down. Meaning that you want to, if you want to continue this account next year, meaning that in this account, purchases account has a balance of 18,500. So meaning that if you want to continue, if you want to open another purchases account next year, you will not just open a new account. You are going to continue with this, meaning that you have a balance last year. This one is telling us that let's assume this Adeyemi's account now is for 2024. You want to prepare account for 2025 and you want to open purchases accounts now. You will now open a new purchases account. What you are going to do is that you are going to continue with this account, or if you open another ledger account now, If you open another ledger account now for purchases account, so you are going to bring this thing forward, and in accounting we call it balance brought forward. Let me just demonstrate it. So let's say this is so let's say this one is for 2025 and we call it purchases account. I don't want to waste time. I don't know why this thing. So this is purchases account for 2025. Let's assume that it is 2025. So 2025 now, how you are going to continue your account is you saying balance brought forward. You are going to write 18,500. So this thing is telling us that our purchases account, we are building on it. We are building on it. It's not that the balance of last year will just go like that. No, it will not go like that. So the balance you have last year, you have to bring it forward. So it is called balance brought forward. Do you get it now? Yeah. Should. So
Yes. Thank you.
Thank you. So the other way around you can do it is just continue your account, just building on this balance that is there, not opening another account. So I guess that is that. So let's go to, I hope everybody is clear now. Yeah. I need to stop sharing. Sorry. Yeah. Oh God, so sorry. So if you want to do our ledger accounts now, our trial balance accounts, so we are still going to build on what we've been doing before. Now this ADME now, we have opened, we have processed different ledger, right? We have processed. Please, David, do you still have question? Do you have question? Please, you can ask your question. Hello.
Hello. Yeah,
Yes, you have
please. Good
question.
evening.
Good evening.
Yes, ma'am. Please, I just want to ask if we have for instance, we are preparing accounts for January 2026, and there was the
Yeah.
balance carried down in December 2025. Before
Yeah.
we start our accounting, are we going to bring that balance carried forward before we continue with the rest of the accounting?
Yes, that is what I'm saying. I said that if you have any balance for last year. Okay, you are saying that for January 2025, right? You will get your
Yes,
question.
yes,
And you want to prepare accounts for 2026. Oh, I didn't get your question.
yes. Yes, I'm preparing account for January 2026, and there
Okay.
was a balance carried down in December 2025.
Yes. So that balance carried down for December 2025, you will carry it forward to January 2026. You get?
Yeah.
Yeah, so that's it. Don't
All
worry, we are
right,
still
ma'am.
going to do question like that. Maybe in cash book. When we get to
All right,
cash
ma'am.
book,
Thank you.
two ledger cash book, you're going to see questions like that. So don't worry. So now let's go to our trial balance. I hope everybody you've done this ledger in your notes because you are going to build on it. Accounting is you building on it, right? David, do you still have question? No.
No, I don't.
Okay, so how is this thing taking? What to see? So can we all see this? I guess I'm going to manage like that. So now for our trial balance. So for our trial balance, everything that we have posted. So we are going to be writing it one after. We are going to be posting it one after the other. So our trial balance. So let's say we are doing this thing together now. So to make it easy, so I will delete everything I have with, and we are going to do it together. Please, if you have questions, you can just unmute your mic and ask so that I can hear you. So the first thing that our ledger now, so you go back, the first thing you do is after posting to your ledger, if they ask you to prepare your balance, so after posting all your ledgers, you have closed your account, you have your balance BD ready. I told us last week that it is your balance BD that you are going to post to your ledger. And if your balance BD is on the debit side, you are going to post it to debit side of trial balance. If your balance BD is on the credit side, you are going to post it to credit side of trial balance. Did you get? I'm not talking about balance CD now, I'm saying balance BD. So there's difference between the two. So now we are going to, what is our first listing that we did? It was cash accounts. Believe me, trial balance too has a format, but for FA they didn't really specify. Because some people will say you post your asset first, then after assets, not current assets, current assets, after current assets, you post your current liability, long-term liability, then your equity component. But in this sense, now we just post it based on our account, based on the ledgers that we have posted, we have opened. So now the first ledger account we open is what? Is cash account. So what is the balance in this account, in this cash account? It is 15,000. So it is this 15,000 now. Do you have a question?
Muna na tati in kin ji shiru ki wankwas tarin.
I didn't get that. I'm so sorry. You said what? Hello? God, yes. My audio is low. Oh, I'm so sorry. Okay, okay, thank you. I hope everybody can hear me. Yes, sure.
Yes.
Okay, thank you. So for this cash account now, I said this is our balance BD. Thank you, everyone. This is our balance BD. Then this is the balance BD we are going to be posting to our trial balance account. So see the way I will post it. So I'll go to my trial balance, which I have opened. So I'll say cash. Which is what is our cash? Please follow me as I'm doing this. Follow me, please. What is our cash account is having what balance? 15,000.
2,000.
Yeah, thank you. Did you see? So for trial balance, this is the format for trial balance. Please, are we together?
Yes.
Yeah. So
Yes, we
Network
are.
is
format for
breaking.
trial balance. Is it my network?
Sorry, your screen is not visible.
Please, I came late.
Oh, God.
We just
Yeah, your network is breaking.
Please,
Can
we
you hear
can
me
hear
now?
you loud and clear. Yes, I
We
can
can
hear you
hear
and your
you loud and clear.
yes, we
Your
can hear you
screen is
loud and
We
clear.
can hear you and your screen is visible enough.
We can hear you and your screen is clear.
Thank you.
Please,
So
can you
for trial
increase the
balance,
volume?
But
The
please,
volume is too
madam,
low,
I can't
please. Thank
see your
you.
screen. I can't view your screen. It's not showing
Then check
on my phone.
Check your
network.
check your
Check your
network. If you cannot see my screen, please check your network. Please check your network if you
If you
cannot.
check his network, your screen is visible and your voice is clear.
Yeah, can we continue the class, please? Thank you. So for trial
Yes, we do.
balance. Yeah, thank you. So for trial balance, this is the format for trial balance. So you have a place for you open particular debit side. This I told you guys that DR represents debits. So you'll be seeing this subsequently. Then credit side. This is so you just open 3 columns like that for particular, for debit, for credit. So for our cash now is a debit entry. So you put it under your what debit entry. So let's go to the next transaction that we have that we opened, our ledger account. So we are done with our cash. Then our capital account. Where's our balance BD? See our balance BD here.
credit side.
Is on which is
30,000.
on the credit side, right?
Yes.
On the credit side, 30,000. So you go to your trial balance account, your trial balance, then you write capital. Then credit side, you come to this column, your credit side column, then you enter it. That's all. Then the next one will be what? Our purchases account. So our purchases account, said our balance BD here, 18.5 debit side. 18.5. Yeah, thank you. So 18.5 debit side. So you go to your trial balance, then you write purchases. So debit side 18.5. Please ensure you're writing this in your note. I will still share the materials. I'm having issue with sharing using iPhone. So sorry. Then the next one is loan account. So this loan account now is having what entry? Credit entry 30,000. So your loan account. So loan is having 30,000, right? Is it 30? Yeah.
It's 40,000.
It's 30,000. Your balance BD. I said we are posting our balance BD. So van accounts, our van account is having debits balance of 40,000. So you go to your trial balance, then van 40,000. And please bring out your calculator because we are going to calculate these things together. Then after van account, our market store is having a debit balance of 5,000. This is it here. So market store, write it. That's 5,000, right? Yeah. So the next thing is what? So after market store, you have payable. So our payable is having what? Credit balance of 4,500. Then after payable, we have what? Sales accounts. Having credit side of what? A credit balance of 21,000. Nice. So our sales credits 21,000. Then after that, I guess we have receivables. Our receivable will have 1,000 debit balance. Then we have drawing a debit balance of what? 6,000. So someone should calculate for me. What did you get?
The credit side is
85,500.
8,500.
So the credit side is how much?
85,500.
8,500.
So what of the debit side? Should give us the same thing. I'm waiting for also. What did you get for the debit side?
85,500 for the debit side.
Thank
and
you.
the credit as well.
Yeah, thank you.
85,500.
Yeah, thank you. So this is telling us that our posting is what is correct. Yeah, see, if your trial balance, when you post your trial balance, when you share your trial balance, if your debit side is not equal to your credit side, that means something is wrong with your ledgers. All the ledgers, all the accounting that you have posted, all the accounts that you have posted, all the entries, that means it is not correct. That means something is wrong with either one of them. So if you open your trial balance account and you calculate your debit side and it's not equal to your credit side, so that means something is wrong. So trial balance will actually make us to know, it will let us know that, okay, what we have posted is actually what is actually correct. So that is that about trial balance. So I would like to explain something. Are we together, please?
No, ma,
Yes,
we
we
are
are.
not.
Yes, we are.
Okay, get it right.
Prosper, please, you have question.
Mama, please, I have a question. Oh.
Okay, you can ask your question.
Sorry, ma. Good evening. I came late due to my work. I'm just coming in now. And I've gone through what you've been teaching lately. Now, ma, rather. Please, my question here is, how can we identify parameters that can be posted on trial balance? And the ledger you prepared, ma, like I said earlier, I came late, ma. I want to know how to identify which of the accounts belongs to, as in which of the accounts represents or belongs where they're supposed to belong, and how is it entered in the trial balance?
Okay, so that means you came late, actually.
Yes.
So
Yes,
for
ma'am.
Mr. Justin, so I said that for trial balance, it actually has a step to follow, but based on with financial accounting, you can post it anyhow you like. For sometimes we will say you start with your non-current asset, then followed by your current asset, then your current liability, then not current liability, then you can post your what is that again? Your equity component, which is capital and drawing, right? And other retained earnings that you guys might not need for now. So based this trial balance is just simple, it's the simplest. Then I'll just walk you through it for like 1 minute. So I said that this our ledger now. Were you here last week? Please, you can unmute your mic. You were here last week, right? Mr. Destiny, please, I'm talking to you.
No, ma. No, ma. I didn't join the class last week. I traveled due to my work, ma.
Oh, so what I will do is you might not. Let me just walk you through it. We have posted a lot of things, and we use this. This is what we use. We use this question. Adeyemi revisited here.
Okay.
So I will not. I don't know. I can't really go back because of our time. So you can just reach out to me. Then I will send voice notes to explain it to you. Is that okay by you? For the ledgers. You can just message me on WhatsApp. Are you on our WhatsApp group?
Hello, man. Hello, man.
Yes, ma'am. Passion.
He can watch the video now. There's a record
Yeah,
video.
thank you. There's YouTube. I'll just someone should tag the YouTube link on the group for him. Thank you so much. I've forgotten. So just go through it. The YouTube video, you understand. Thank you so much. So for the trial balance, I can just it's just you picking what we've done last week, our ledger account. Then we started from our cash account, then your balance video. Just go through the YouTube video. You are going to understand it, I promise. So we don't understand, then that's fine. Thank you. So is that all? Is there any question before we continue? So I'd like to explain something in your pack here. So, okay. You didn't really explain what I want to explain. So I'll just use my notes. So this trial balance now, it actually makes sense that we said that cash is what is a debit entry, right? Is an asset, so you must have debit entry. See it here. Then capital is what is an equity. See, is having credit balance. Purchases is what is like expenses, and it's having what a debit balance. Loan is a liability, is having credit balance. Van is an asset, motor vehicle is an asset, and it must have what a debit balance. Market store, like a building, so it should have what a debit balance. Your payables, liability, credit balance. Then your sales too is an income. And we said income it must have a credit balance. Mr. Chris must have explained that. Then for receivable is a current asset, debit balance. Drawing, it will reduce our capital. So that's why it is what debit balance. Do we get it now? So for this now, I don't know how I can use arrow here. So you can put it in your notes, then just use arrow like this. I don't know. I'm trying to do something. It's hard. Shape.
I don't know, check her downstairs.
So this one now. So this one now, this arrow that I pointed here, cash, you can put it in your notes, assets, current assets. Then for this one, for capital, equity component. Then for purchases, expenses, like that. Be labeling it in your notes like that. If you don't understand, ask me. Then for loan, liability, current liability. Then for van is what is an asset, non-current asset. Market store is an asset. Market store, an asset. Payable now is a liability. Sales is an income. Receivables is an asset. Drawing is equity component. It will reduce our capital. So that is what I want to explain with that. So after this, so let me go back to your pack. So that is that about trial balance. So there's something that we are still going to do under FA. I don't know, maybe it's chapter 5 or 6. Is adjustments, trial balance adjustment. There are some items that is going to affect your trial balance, like depreciation, accruals, prepayments, bad and doubtful debts. It actually makes sense. You know that these receivables now, many debtors, people owing us. So for receivables now, if you are anticipating that people that bought on credit from you are going to pay next month, what if like one person out of people owing you died? Are you still going to claim the amount? Will you be able to get it? What if you are unable to get that amount? What if the person is unable to pay? Do you get? So that is what it will lead to what? Bad debt and doubtful debt. Do you get? So that one will actually what? It will affect our trial balance. Let's assume that in this place we have receivables of how much? We have receivables of 1,000, and out of this 1,000 we are unable to get 200. Some of our customers, this receivables is not actually it's not before one person. So let's assume that our customers are owing us is receivables, right? And they did not pay on time or not on time. Some part of them they did not pay what they are owing due to some issues. So they did not pay 200. Do you know that the 200 will actually affect what? It will affect our trial balance. So that 200 is called bad debt. Sometimes business will make provisions in accounting. Once it is, is it IS 37 or so? Once your bad debt is reaching like your receivable is above 1 year. Is it 1 year? I can't really remember the number of months or years now. So once your customer is unable to pay for a certain period of time, under the IS 37, under the provision of the under the standards, it is required for the business owner to make provision for the bad debt that this particular customer, we are not expecting that the person will pay. So we are making provision for what? For bad debts in case this person did not pay. So that one too, it will affect our trial balance. So those are the items that will affect your trial balance. Depreciation. So what is depreciation? You know, when you build a house, it is not expected that the first year how the house is in the first year is how it's going to be in the next 50 years. No, the capacity. So that will now what? It will give room for what? Depreciation. Your house is expected to depreciate. So you make provision for what? Depreciation. You might see, okay, the building will be depreciating by 50%, it will be depreciating by 10%. Likewise, our motor vehicle, furnitures, and the likes like that, all those assets, they used to depreciate. So when you make provision for depreciation, it will affect your trial balance. So, and all these adjustments now, we are going to adjust them in our trial balance, and we are going to deal with it in chapter 6 to 9. Do you get? So we are still going to talk about it in full in the next chapters. So inventory too. So inventory, how do inventory affect our trial balances? Okay, we are going to deal with that under IS2, and it's actually interesting. It's an interesting topic. And IS2, when I did one interview, they asked me about IS2, and you have to know everything. All the standard actually makes sense, and they are interesting, and it's what you apply day to day when you're working. They actually apply it to work. So inventory now, I told you last week that opening inventory is an expenses, and you use it. Opening inventory categorize as well as an expenses, but closing inventory now it still makes sense as well as an asset, because let's say that this is 2025 and what we have in our inventory is still what's in our store. We still have some inventory in our store worth 50,000. Are we going to throw it away, or are we not going to account for it? If you are going to account for it as an accountant, you have to tell them that this inventory is an asset source, so we have to account for it. So that's why we categorize that under what? Under current assets. So inventory, closing inventory, you're going to debit current assets and you're going to credit what? Profit or loss. That is cost of goods sold, cost of sales. So inventory affects trial balance in the sense that you have opening inventory, you have closing inventory, and under IS2, there's this principles. Don't let me go there now. That it will actually affect our trial balance. So when we get there, I'll explain to you guys. So those are the what adjustments that will actually affect our trial balance. So, okay, this is what I was trying to explain the other time. So you can just check your pack. So you see something like this, equity, right? Equity. So now what we are going to know is that we want to prepare but before we prepare financial statement, please note this. They give us information about what is that extra information. Our closing inventory of Adeyemi is 45, because we want to prepare financial statements. Now, I said that we are building financial statement, right? And it starts from transaction. They gave us transactions that happens, that occurs. Then from the transactions that they gave us, we built what our ledgers account. Then from ledgers account to what to trial balance. Then from trial balance now, we're going to build financial statement. We're going to do profit or loss, and we're going to do balance sheet, which is a statement of financial position. But before we do statement of financial, okay, let's do that. After that, then we are going to do journal. Then we are done with this posting. So they gave us closing inventory of Adeyemi to be 45. Let's take note of that. So this is cost of sales now. This is our cost of sales. So for they can actually keep it in your, I guess you guys are doing multiple choice and short answers. So they can actually give you questions that, okay, can you calculate cost of sales? So how do you calculate your cost of sales? Cost of sales is just saying that you add your opening inventory to your purchases. Then you less your closing inventory, it will give you cost of sales. But in some instance, you will have your return inward and you will have your carriage inward. Now listen, you can write this thing down, please. So to get cost of sales, this is the normal way to get your cost of sales. But some examiners, they will still give you more transactions. So when they give you, if you have return inward in the questions they give to you, you have carriage inward, return outward. Is it return outward now? So if you have return, if you have carriage inward, if I remember which of the two, I will let you guys know. So if you have carriage inward now, you are going to what? You are going to add it to this place. So after your opening inventory purchases, then you write carriage inward, making 3 items, right? Making 3 items, then return outward. Don't let me add down. I'll check my notes later, then I will know which one of them. Or if you say any other question, that's why I said that you have to keep on solving questions. So I'm making it 3 items. Now I say opening inventory, purchases, and carriage inward. If you give you the total for this, then you less your what? You now less your closing inventory from it. It will give you cost of sales. Do you get that now? So closing inventory, I've already explained it, that is recognized as an what? As an asset, as it was a deducting against the cost of what? Sales expenses. I already told us this. Okay, so what are they trying to do in this place? Now, everybody please get your cost of sales and let me know We don't have opening inventory. Assume you don't have opening inventory. So based on what I explained in this case, based on this, I will please in the comment section, I want to know your cost of sales. So what you're going to do is you put your purchases here, then you less what? You less your closing inventory, right? So the closing inventory is what? I said purchases. Just put your purchases. What did we get for our purchases? I guess it's 1,000, right? Is it 1,000? Our purchases is how much? What is our purchases? 18,500. 18,500, right?
Yes. Yes.
Then the next one is what? Our inventory, closing inventory.
Yes.
So you write less closing inventory. Which is how much?
Let's come back to the question again.
14,000. 14,000.
Is it no, please?
No, please. 4,500.
It's 4,500. Thank you. It's 4,500.
4,500.
So you, yeah, thank you.
Is 14,000.
So in accounting, if you see anything in bracket, it means what? Deduction. You have to subtract. So you deduct. So now 18,000 minus 4,500, it will give us how much?
14,000.
So our cost of sales is what? 14,000. So if you see it in your, thank you. If you see this in your multiple choice question and it said calculate the cost of sales. Now, if they give you see opening inventory, excuse me, if you see opening inventory in your question, then you just put opening inventory here, opening inventory. So in this sense now, in this case now is 0. You don't have anything. So what did you? So before this, you get the total. Then if they give you carriage inward. So if they give you carriage inward, then you put it here too. In this sense now, it is 0. So the anything you get now is what? Is your cost of sales. Is it clear? Oh, my network. Is it clear?
Yes,
Patience.
Yes.
Yes, it's clear.
Yes, it is clear.
Thank you. So, Patience, you have question?
Sorry, I don't know if it is my network. I can't see your screen.
Maybe you should log out and come back. It will be your network.
Thank you.
Yeah.
All right.
So that is that. So what we want to do now, what we want to do is statement of profit or loss. So for statement of profit or loss, it's just saying that income and expenses. It's like you deducting your, okay, what did I have minus what I have spent. Do you get? So this part now, this first part, sorry, I'm trying to, so from sales to gross profits, they relate to the what? The business of the organization. Let's say for Dangote now. So Dangote is into what? Let's say cement. So now from sales of cement, opening inventory, the inventory, that is the cement they have in their stores. Then the purchases means that the instruments, the ingredient they used to produce their cement.
My hand is up.
Your hand is up. Okay, what's the question?
Okay, ma. It's about this example you gave about how to get a cost of sales if you're being given purchase and closing inventory. So I want to ask, what if in a situation where you're not giving the purchase but you're giving only opening inventory and closing inventory, and you're asked to get your cost of sales?
I love that. So you're saying that if they give you only the inventory, the two inventory, right?
Yes, ma'am.
Okay, that's nice. But then that means if they give you inventory, that means there's ingredient for you to look for your purchases. You are still going to get there. Accounting is very, very interesting. Very interesting. I love accounting. That if an examiner gave you inventory, they gave you opening inventory, they gave you closing inventory. And another way, okay, so let's go back to this case. Another way to do this, add comments. So another way for them to do this thing, or let me just ignore this comments. Now is that they will give you cost of sales. If they want you to look for purchases now, do you get what I don't know? Maybe you are getting what I'm saying. If they ask you to look for purchases, that's another thing. There's no how they will give you inventory. There's no how they will give you open inventory, closing inventory, and without purchases, and they will not ask you to look for cost of sales. Another way an examiner can set a question is them giving you cost of sales, they will give you closing inventory, they will give you open inventory. So let's say for this question now, you have the cost of sales to be what, 7,000, right? Let's say examiner give you cost of sales 7,000. So let me add comments. So let's say examiner, they give you cost of sales. I will just use COS as our cost of sales to be 7,000. This is another 14,000, right? 14,000, sorry. 14,000. And then now they gave you closing inventory. So I will use closing inventory, CIV, to make it fast. Closing inventory to be what's our closing inventory? 45. Right? And they did not give you opening inventory. Or we can just, after this one, I will manipulate one figure, then we'll do it. So they now ask you to look for what? Purchases. That is another way they can ask you to look for. They can set questions in short answers. So now, if they ask you to look for purchases, what will you just do? You just walk back. Do you get? How did you walk back? Okay, you've gotten they've given you cost of sales, right? So is you saying, this is my cost of sales now? I'm coming. So this is my cost of sales now, 14,000. So what will you do to get your purchases? This cost of sales, how do you get your cost of sales? You said that opening inventory plus purchases minus closing inventory will give you cost of sales. So is you doing this? Open the comment, this thing. So nice, you write your opening inventory. Opening inventory to be what? This one is questions. So this is the questions they gave us. So we are trying to do the solution now. Let's say solution. So that some people will not be asking questions again. So our opening inventory now is 0. So we need purchases. And they did not give us purchases. They asked us to look for purchases, right? So you bring it down. What is the closing inventory they give to you? They give us closing inventory.
Closing inventory is 45.
So they gave us closing inventory of 45, and you know that it's supposed to be 45. If you do this in your notes, it will actually make sense. So this is cost of sales now, and they gave us cost of sales to be how much? 14,000. And the question, let's assume it's the question now. We've not solved it before. So this thing now, you've gotten the total. Cost of sales is our what? Cost of sales is the total, right? Cost of sales is total. This is the total, this thing that we need. So how do we now get our purchases? Is you working back. So how do you work back now? This one is what? It is negative. When you are working back, you add it back. So this means you do 14,000 plus 45. It will give you a what? It will give you what we have here. Assuming, did you get now? Am I making sense?
Yes.
Yeah.
Did you guys get it?
We are following.
So if I give you a question now, like let's say, so everybody take it down. Let's say your opening inventory is 10,000. This is the question, classwork. Opening inventory is 10,000. Cost of goods, so cost of sales Your cost of sales is 40,000. Closing inventory is 5,000. I said opening inventory is 10,000. Cost of sales is 40,000. Then closing inventory is 5,000. Determine purchases. So everybody, please just type it in the comment section. Purchases. What did you get for your purchase? Thank you. We expect that.
5,000 now.
Please
45.
type. You said what?
45,000 now. For purchases.
35,000. Thank you. Is there any option? 35,000. Thank you.
45. 45.
35.
How did you get your 45? Okay, can you explain to us the 45? Why did you do this?
Okay, so to get purchases, closing stock was not complete.
I cannot hear you.
Okay, ma, can you hear me now?
Yes, I can.
Okay, to get our purchases, like you earlier mentioned, you said closing stock plus cost of goods sold. And the cost of goods sold is 40,000. Am I right?
Yes.
And the closing stock is
Yes.
5,000. Now, to get my purchases, I'll add it together to get purchases.
Okay, this is what I'm trying to say. It's because I'm using that comment card. Now,
okay.
Say that if they give you cost of sales, they give you opening inventory and closing inventory, and they ask you to determine purchases. What you just need to do is what you work back. We call it work back in accounting. So how do you work back now? You know that you already know that you do opening inventory plus purchases, then you get one total, subtotal. That subtotal now, right? You get subtotal, then you now less your what? You less your closing inventory from it to get cost of sales. So now they did not give us purchases, they gave us cost of sales to be 40,000, they gave us closing inventory to be 5,000, and they gave us our opening inventory to be 10,000. So why working back? I said the other time that when you are working back, what is negative will turn to positive. What is positive will turn towards negative. So while working back, we want to work back to get your purchases. So our cost of sales will be 40,000 plus 5,000 minus 10,000 to get purchases. Does it make sense, or I should demonstrate it?
We are following. It makes sense, ma.
It makes sense.
Okay, so that's how they got 35,000. So it's just 35,000 like that. Well done, guys. Makes sense. So that's just it. So in case you see it in your MCQ, short answers, determine purchases, determine cost of sales, just get your 1 mark straight. Just, that's how you get your mark. 1 plus 1 plus 1 plus 1. And when you are doing your ICANN, don't just start that I'm looking for the 15 mark, I'm looking for the 20 mark. Sometimes MCQ, all these short answers, you guys are actually lucky. When you get to skills, there's nothing like short answers or MCQ. But in foundation, you have short answers and multiple choice questions. So you can get that is like 50 marks, I believe. If you get 40 from that side, then from the theory aspect, do jama and get your mark and go. You get, so that's how you get your marks. So now that's that. So for profit or loss, I'm trying to explain profit or loss now. So our statement of profit or loss for the period ending. So I said that I was trying to explain that from your sales figure to gross profit has to do with what the business is actually doing, the trading activities. So let's say that I'm using Dangote for example, and I said Dangote is into cement. So this area is for the business, what we are really into, the trading activities of the business. So this says there has to do with what? The sales of cement, right? Then this opening inventory means opening inventory of cement that we have indoor in our factory. Then purchases has to do with what we actually purchase from our supplier to produce the cement. What we did you get has to do with what the company is producing. Then this closing inventory has to do with what the value of the inventory that we have in our store at the year end. You get then to give us, so these three now will give us our cost of sales. We know how to calculate our cost of sales. Then so how they can, another thing they can ask you to calculate in short answer is gross profit. So if they ask you to calculate gross profit now, gross profit equals to what? Gross profit equals to sales minus cost of sales. Gross profit equals to sales minus cost of sales. So that is the what? Gross profit. So I will not go to my word. So we'll just do it here. So sales, this sales, if you look at check your trial balance. Where is our trial balance? So if you want to prepare your profit or loss, it has to do with income and expenses. Asset is not coming into your what? Asset is not going into your what? Profit or loss account. She gets, and I stated the other time that you should write this in your notes. I said cash is an asset, capital is what? Is an equity, purchases is what? Expenses, and purchases, I've already explained that trading of the what? Of the business. Loan is a liability. Van is what? Van is an asset. Market store is an asset. Payable is a liability. I already told you guys to write it. Then sales is an income. Sales of the product of the company. Then receivable is an asset. Drawing is what? Equity component. Is to reduce our capital. So now we want to prepare our profit or loss. Our profit or loss has to do with what? Income and expenses. So from this trial balance now, what did we need? We don't need cash for now. It's an asset. We don't need it. We don't need capital. We need what? Purchases is an expenses. And purchases has to do with what? I already explained that purchases, what do we purchase? That has to do with what the business is into, the product of the what? Of that business. What are we actually producing? So purchases of the what? Equipment we use to produce our products. So we need what? We need purchases. Then loan, we don't need loan. What is a liability? Van is an asset. Market store is what? An asset. Payable, a liability. So for sales is what? An income. I explained that what selling of what? Our products, when we sell our product to our customers. Receivable is what? Is a liability. Drawing is what? Receivable is an asset, sorry. Then drawing is an equity component. So let's just do our profit or loss like that. So profit or loss is just what? It's not T format. It was before that we used to do T format for profit or loss. So now it's just vertical. It's you writing statement of profit or loss account for the year ended. So this is it. Same. So statements of profit or loss for the period ending 31st 2019. So if they give you the name of the company, now they said Adeyemi. So me, I prefer to use, I'll first write Adeyemi on top, then I will enter meaning you come to the next line, then I'll write statement of profit or loss for the period ending December 31, 2029. So this is how they used to write. Then you rule in your notes. You know that because this one is I don't know, maybe I can use notes. I will try the next class. So you'll see how I actually write it. So this one in your notes, you will rule this thing. This from Adeyemi to this, you have to rule it vertically. You rule it. Is it vertical or horizontal? Yeah, vertical. You rule it. Then let's go to the main this thing. I said that this account just has to do with income and what? And expenses. And I said from sales, from the first thing you enter is your sales. What the business is into, what income did we make as a business, right? We are into cement. How many cement did we sell? So it's the total amount of cement is what? 21,000. Then you do 2 naira sign. Yes, do 2 column instead of you doing column. Just naira sign, 2 naira sign. Then you take your sales to this side, 21 naira, 21,000. Please, are we together? Am I making sense? Yeah, thank you. Market store is just like a building. You know, market store is telling you like if you like a shop is a building. Market store, if you build a like a shop arena, market arena, so that it is market store. So it's an what is an asset. Please, Aisha, do you have question? Please, if you don't have question, please mute your mic.
Please, let's see your screen.
Yeah, thank you. If you don't have question, please mute your mic. So as I was explaining for our profit or loss, so I said what the business is. So in your notes now, right? Adeyemi, then you enter. I said like you go to the next line. Statement of profit or loss for the period. So for the year ended 31 December 31st. So anyhow you choose to write it. Statement of profit or loss for the period ending 31st December or December 31, 2019. So the first thing you do is what? Your sales, the income, what the business is into, right? So when you write your sales, what is our sales from our this thing now?
21,000.
So from here, 21,000. So you enter your sales. I said you are going to do what? You are going to do 2 column, right? So you write your sales, and I don't want to be wasting time. Just do our 2 naira sign, then to the edge of where the second naira sign is, put your what 21,000 naira sales there. Then what did we sell? So now before you go to the next one, so from this place now, I need an honest answer. From opening inventory to this closing inventory is called what?
Cost of sales.
Cost of sales.
God bless you. Thank you. Yes, cost of sales. Cost of sales. So now, what I used to do is, so the examiner will actually know that you know what you are doing, right? So now after sales, the next line you want to write is cost of sales. So this is what I'm trying to say. Let's say this is my my notes. This is my profit or loss, statement of profit or loss. So I've written my sales, I've entered the 21,000 naira where I need to enter it. Then the next thing will be like my cost of sales. My cost of sale in my notes. This is how I used to do my own. Then I'll rule it. That's how I used to write. Then I'll rule it, I'll underline it. I used to even put 2 column. Then cost of sales, that means you know what you are doing. Then you start with opening inventory. Opening inventory, write it like that in your note, please, so that it. Then what is our opening inventory? We don't have any opening inventory, right? Opening inventory should not be underlined. So opening inventory. After opening inventory is what? Purchases. So what is our purchases?
18,500.
So 18,500, write it in your notes like that. So after purchases, after purchases now is what? Closing inventory. So did you see it now? So opening inventory is 0. So purchases for this thing is what? 18,500. So the total of the two, I said subtotal. So this is subtotal of purchases and what? Opening inventory 18,500. So you less your closing inventory. They gave us closing inventory to be 4,500. Did you get?
Yes.
Please mute your mic. So now the total, our cost of sales now. So you write your cost of sales. So me now, I don't need to write my cost of sales again. So as I was explaining. So assuming now purchases, where's my purchases? My purchases, then I've gotten my subtotal. Then after this thing, I will have gotten my subtotal here. Our subtotal, then I will rule this one, right? Let's say I've gotten my subtotal, then inventory. I will enter closing was closing inventory. Then after writing my closing inventory, I will not just come back here to write cost of sales. So I'll just anything I got in this place, let's say this is, I've gotten my closing inventory to be, I'll put it in brackets. As a professional that you have to, you don't use minus, you put it in brackets. So now I'll just underline it like this, then take it to the so you take it to the next, where your next naira is our sales. Let's say we've put our sales 21,000. So what did we get? Our cost of sales. Our cost of sales is how much? 14,000, right? So you put that to in what? In bracket. In bracket. Then you deduct it from your 21,000. So this one to now should be in bracket. In you underline it rather. So anything you get now. So 21 minus, I don't know, maybe I'm making sense. This is what I'm trying to explain. Do you see the 21,000? Open this, delete. So this is what I'm trying to explain. This is sales here now. So this box here represents our cost of sales, our cost of sales item. Then this is our cost of sales here. So cost of sales means what? Who is this person? Please mute your mic. Mr. Indris, thank you. So these are our cost of sales now. So to get gross profit equals to sales minus cost of sales. So 21,000 minus 14,000 will give us 7,000. Is that clear?
Yes.
Then, yeah. So the next thing after gross profit is you adding any income you have. Yeah, after gross profit now. After gross profit, assuming it is a standard question. Hold on, sir. Assuming it is a standard question now, they will give you other income that is not really related to the trading activities, like discount receive, sales, anything related, any income that is not really related to what the business is actually selling, not cement. No sales of cement, anything income that does not relate to sales of cement that the business have. So you add it, you put it under gross profits. So you add it to gross profits. So that's the next thing you are going to do. We are going to, I pray we'll see standard question. When we get to cash, you are going to see standard question. Do you get? So after gross profit, then the next thing is all those income. All those income. If I see question, I will check your past question and I will send it to the group. I pray I will be less busy. So then you other income, you add it to gross profit. Then expenses, any expenses you have, then you deduct it. Now in this case, now we do not have any expenses. It's less expenses, none in this case is zero. So our net profit is still equals to what? Our gross profit? 7,000. Is that clear? Is there any question? So our net profit is 7,000 because we don't have any expenses. Please, do you understand profit or loss now?
Yes.
Thank you. So let's go to balance sheet, statement of financial position. So for statement of financial position, for this simple question they gave to us, it just means your assets and your equity components and liability. So when you did your accounting equation, they said asset equals equity plus liability, right? Your chapter 3 or so, is it chapter 3? Yes. So you did equity accounting equation, right? So and it states that assets equals to equity plus liability. So that is what we want to demonstrate in this case now. So what are the equity? What are this thing that we have in this place now? What's our trial balance? So this cash now, some assets, we have capital, we have loan, liability, we have van, assets, market store, assets, payable, liability, receivables, drawing, and believe me, I said it the other time that closing inventory is what? An asset. So don't forget it. Yes, don't forget it. See, even though when you get to your you want to do current assets, the first thing you should write, if you don't want to forget, is the inventory. Right, so see, that is the first thing because it's easy to forget. So now let's do our statement of financial position now. So the first thing you are going to do in your statement of financial position, the format is non-current assets. All the non-current assets, that means sometimes before we used to call it tangible assets or fixed assets. We call it tangible assets before or fixed assets, meaning the assets that can take like a longer period, like building, like motor vehicle can still take like 10 to 20 years. Then for store, that is building, store is building, can take to 50 years. So those ones are what they are fixed assets. We call it fixed assets or what, or tangible assets. So current assets like for duration of 1 year, like inventory, they are just current, they are solid, like you can just convert them to cash. Do you get? So they are what, they are current assets. They cannot take, so you can't have an inventory up to 10 years, 50 years, no. So inventory in your store, like just for 1 year, receivables, your customer are expected to, you are expecting them to pay within duration of 1 year and like then bank too. Something you can just tell on time. You can just go to your, as I said, you can just go to your bank and withdraw your money and settle any liability you have. So it is current. You can, it's something you can just take and just convert to cash. Your inventory is something is solid too. Your inventory, you can just take it and go and sell it in the market. Receivables, you can just call your customer, you must pay me my money today. It's like not really solid, but at least it is solid. Like they can pay you within the range of 1 year. Do you get? So that is current assets. Then the after settling the assets, so current assets plus current non-current asset plus current assets will give you total asset. Then we go to equity components. So equity in this phase now they didn't even put the equity component, they just put capital introduced at the start of the business. So in this phase now, from here, you have to put equity and liability. This is what I'm trying to say. So after the total asset, before you writing capital introduced or something, so the first thing you write is you label it. What section are you? Equity and what? Liabilities. Equity and liabilities. Then you rule it. Then you now write your what? Capital. So after your capital, then you capital for the period, then non-current liability. So in this sense now, they categorize the loan as non-current liabilities because they are expecting you to take like for loan to be non-current, meaning that to settle the duration is more than 1 year. If it's a loan that you can settle within 1 year, it is a current liabilities. But if you cannot settle it within 1 year, it is non-current liability. Do we get that now? Trade payables is current liability. You are expected to pay your suppliers within a year. That is just that. So now let's just do it one after the other. So now in your book, you're going to write statement of financial position as at, you know that profit or loss is so it's for the period, for a period. But financial statement of financial position is as at you are building on it. But for statement of profit or loss is for a period or just a year. You are preparing it for, okay, this, if you are preparing profit or loss for this year, it is for this year. You are preparing profit or loss for 2024, is for 2024. But statement of financial position is as at. As at meaning that you are building on it. Tricket. Like this van now might not be the original amount of the van of the van that we have in our company, might have depreciated. I said it the other time that van they will depreciate it. Store is a building, will depreciate it. Do you get now? Then this trade receivable might not be the original receivables that we have. We might have reduced our bad debt fund, might have run into overdrafts, a lot of things that you are still going to see when we get to other chapters that actually make sense. But this one is just trying to introduce us to how financial position is like, how it actually looks like. It is more complex like this, but it is simple. It's very interesting. Once you've gotten the procedure, it's very interesting. So for the aside for open this thing in your notes, statement of financial position as has December 31, 2019. So the first thing you are going to do when you are doing your financial position is what non-current assets. So in our trial balance, and you're going to pick it from your trial balance too. What do you have in your trial balance? So they will give you, if you want, if they ask you to prepare financial position or anything, they will actually give you trial balance too. So they will always give you trial balance. If they ask you to prepare financial position, statement of financial position, they will give you trial balance, or they might just scatter it for you, not giving you trial balance, putting the credit and debit in the same side, just single column. Like they will not leave it to you to be what? To be okay, this capital is supposed to be credit, cash supposed to be debit, is left to you. So they will not give you additional information and the likes like that. You will still see it in subsequent questions when you get to that chapter. But for this purpose of this transaction that we are doing now, we want to prepare the statement of financial position. We are going to use our trial balance alone, right? Now, I said that for your financial position now, you start with what non-current assets. So what are the non-current assets that we have in this trial balance? Is cash a non-current asset? No. Capital? No. Purchases? No. We've done purchases as what? These are it's an expenses. Loan, liability. Van, yes. Van is a non-current asset. Van and market stock. So in your notes like that, in your notes, so write non-current assets, then write van and market store. Van is 40,000 and market store is 5,000. So that is what non-current assets. Then total it to be what? 45,000. Then after that, enter into the next page. Then write current assets. So this is what I'm trying to explain. So this is what I'm trying to explain. Non-current assets. This is NCE. So we said we have van. You have van to be 40,000. We have store, that is market store, to be 5,000. So you rule it on the line. So the 2 is what? 45. Then you put 45 in front of it. Then the next thing will be what? Current assets. Then your current assets, let's put a space, but you don't need to put a space in your notes. You underline it. So what are the current assets we have? Let's check our trial balance. So the current assets we have, I said first, thank you. I love that. I said inventory so that you will not forget. Inventory.
45.
Thank you. So our inventory now is 45. So the next thing is what? What other things do you have? Check. So what are this thing that we have? That is what a current asset, 15,000. I already said the other time that cash is what a current asset. Yes, you have it in your hand. So cash. 15,000. So the next thing we have is what?
Receivables.
Thank you. Receivables of how much? 1,000, right?
Yes.
What is the total of our, so if you check our trial balance now, we don't have anything that is current asset again. We are done, right? We have used cash, we have used receivables. So that is that. Please mute your mic, please. So what is the total of our current assets?
65,500 of current assets.
25.
35.
20,500.
50,500.
20,500.
20,500. 20,500.
20,500.
20,500. So now you add, so you ensure that it's the same naira side. So I said you're going to do 2 naira. So naira in this side of the first this place, then naira in this side too. So this side now you are going to add your current assets and what? Current assets and your
Non-current assets.
non-current assets together. It will give us 65, Abi.
Yes, 65,500.
65,500. So you underline it. So that is what total assets. So this is total assets. So that is that. So you are going to, so you enter, you do what? Equity. So I said you write equity and liabilities. Then you enter. Please mute your mic, oh. So what are the equity component that we have? Capital, right?
Yes.
So for capital, so capital 30,000. Net, so the next thing you're going to do is net profit. So assuming it is a standard financial position, we call it retained earnings. Retained earnings means that profit that we did not distribute to our shareholders, the owner of the business. It is called retained earnings. Do you get now? So, but in this place now, it is just a normal, it is just an abstract, not really a standard financial position question. So we use our what's net profit. So the net profit we get in this place is how much? We got net profit of 7,000. Yeah, we all agree to that, right? So you put your net profits. $7,000. Then your what? You're going to deduct this, something is negating it. Well, I was explaining the other time, I said drawing is what? Equity components, right? And is negating it. See, if we check this place, our capital is credit. And profit too. Profit is what? An income. It's a credit what? It's a credit item. But see, drawing in this space is what? Is a debit item. And I explained in the last class that drawing is reducing, it will reduce our capital, right? So it's drawing is going to reduce, and I said that drawing is when the owner of the business feel like, let me enjoy myself, let me just take out of the profits of my business and use it for my own personal use, not for business use. So that is where drawing comes in. And when our drawing is what? 6,000, right? So what did we have? What is the balance?
31,000.
1,000.
31,000.
31,000.
Okay, thank you. So you have 31,000 here. So the next thing is what? Liabilities. So I said that for the purpose of this question, they categorize the loan. They categorize it to be what? Non-current liabilities. They say it is all non-current liabilities. So meaning that the duration is more than a year. So if they give you a loan that the duration is just 1 year, so it will be what? Current liability. Is that clear? So our loan now, how much is our loan? Check your notes. Loan is how much?
30,000.
Thank you. So you bring it here. Since it's the only non-distinct that we have, it's only non-current liabilities that we have. Then your current liabilities now. Sorry. So your current liabilities now. So what are the current liabilities that we have? Check your distance, your trial balance. Payables. Thank you. Hope everybody agrees that is payable. So we have payable. Payable of how much?
4,500.
Is that the only current
500.
that we have? So it's only payable that
Yes.
is current liabilities that we have.
Yes.
Payable of 4,500. So what is the total? What is the total? I said everybody should take calculation.
500.
65,500. Thank you. So our account is balanced. So this one you call it total equities and liabilities. So I hope you understand. Let me use this one to just delay us. So that is correct. So 65,000 total assets 65, meaning that your account is correct. Did we get that? Is there any question? Do you have question?
I have a question.
Please ask.
Okay. My question is this: in exam, where we have a standard question now, and we have a drawing of 6,000 naira as it is in that question now, and we have in an additional question we have another drawing of 2,000. Are we adding both of them before minusing it from the
yes
or my plus
yes
or minus?
you are saying that we have two drawings, right?
Yeah.
You would have settled that. A standard question, you would have settled that in your ledgers. And if they did not ask you to prepare ledgers, then you write it is just like here now. This is how you are going to solve it. So here now, where is our drawing? So this place that you have drawing now. So you just put brackets in front of it, saying, let's say the first one is 4,000. So you just do 4,000 plus 2,000, telling them that you have two drawings. Did you get?
Yeah, yeah.
Or you can just do additional information. You do I say additional, you just do um working notes. You can just write working notes. You can just write working notes for them. Then you take working note one. Then you write it maybe drawings for director Taiwo 4,000, director Toby 2,000. Then you add the two together, making 6,000. Then you come to this drawing here. Assuming you are using work notes, then you do work notes. WK means working notes. So you write working notes one, then you close it. It's telling the marker, the person that wants to mark your booklet that this drawing, go to my working note. I did some calculations there. Is it clear?
Yeah.
Okay, so that's it.
All right.
Is there another question?
I have a question, ma'am.
Or someone asked that for Basirat, why is loan a non-liability? I explained that assuming I'm to do this question on my own, since they did not mention that in the question they gave to us that Adeyemi did not pay on time or the loan is taking like 2 years. So now they assumed that I'm trying to check, maybe they mention it like the loan is for like a longer period of time. But if the loan is for short period of time, it will be current liability. But a loan of long period of time, for a longer period of time, it will be what? Non-current liability. So let's assume that this loan now is for, it will take so any loan that is above 1 year, it is non-current liability. You categorize that as what? Non-current liability. But if it is just, let's say 1 year, it is current liability. But anything above 1 year, it is non-current liability. So I don't want to take us back. So I've explained that. Any other question, please?
I have a question.
Please ask.
Okay. In a situation whereby drawings, in our trial balance, the drawing is in the debit side. What if it's in credit side? I need to add to the capital because this drawings is in debit side and you said we'll reduce it from our capital. What if it's in credit side?
See, if your drawing cannot be in credit side, last class we said anything that reduce. So we said that drawing reduces our capital. If you go back to your study pack, you will see it's like 4 this thing that they put there, and we explained that when your capital is reducing, you debit it, and they put example drawing, meaning that drawing will reduce your capital. Drawing is saying that the owner of the business will withdraw something from the business. And I said that let's say that you are selling clothes and now you want to do 30 December. Let's say we are now in December, you want to do 30 December and you have like you want to go to somewhere and you just say, let me just take this gown and put it on. That means you have withdrawn something from business. So that thing, that gown that you took now is called what? It is called drawing. Or let's say you just like, let me just withdraw 50K from my business account. So that 50K is called drawing. It cannot be in credit side. Credit side is saying equity component and income. And debit side is saying that this is an asset or was an expenses. We explained that last week. Is it clear?
Yes, ma'am.
All right, thank you. So I guess we are fine, right? All right, so let's go to the next one, which is journal. And journal is very simple. Journaling is very very simple. So like this example now, we just use Adeyemi as an example, then we'll be fine. But the major, when you're going to use journal, like you are going to know that okay, I'm preparing journal accounts. I'm really preparing journal accounts. Is then we get to is it chapter 5? journal, all this book of, yeah, they you mention it, posting from book of primary, yeah, chapter 5, yeah. So I'm up to date. So this chapter 5 now. So like when you chapter 5 is explaining prime entry, 6-day book, purchase day book, all those prime entries, book of prime entries. So when you post them, what you are going to use to clear the account is you taking them to what? To journals to explain what you have done, because you are not actually taking them to a general distance. So you take them to journal to explain what you have done in the what in book of what prime entries. And when you make adjustment, trial balance adjustments, which I have explained the other time, all those bad debts, depreciation, prepayment, and accruals. So when you adjust anything, you are going to use journal to explain that this is what I have done. Do you get? And journals too is like format of trial balance, but not really. It's just you putting debit and credit as it is in this side, credit and debit. And this place now, this place that they write name of accounts, name of the account with debit entry, name of account with credit entries, what you call it, details or particulars. So what are you doing? You write details or particular, then the next column will be for debit, the next column will be for credit. So when you want to enter your particulars in journal, the first thing you're going to write is the name of the what, the details of the item with what, the debit entry. Then the second one, what, details of the what, the transactions with what, credit entry. Not you writing credit before debit. This one now, that is the rules of journal. So once you set up your journal account, then particulars, debit, credit. Do you get? So when you want to post a transaction, so let's say that the first thing you want to post in this place now, where's that come please? Because I need to duplicate. Okay. You should have it say. No. Not really. This is not what I want. I'm coming. Journal. Okay. So this is it now. So this is Adeyemi here now. This is Adeyemi now. So the first thing, Adeyemi introduced cash as capital. So if they ask you to post this thing to what? To your journal now. So what are you going to do? So the first thing, what is the debit entry? Adeyemi introduced 30,000 cash as capital. So what are we debiting? You're debiting cash and you're crediting capital. So when you get to your journal, what's the first transaction you are going to write? You're writing cash. The first thing you're writing cash. Okay, let's just go to the solution. See it here. So the transaction one, cash, 30,000 naira, capital. It's just like you doing ledger, but it's just that it is in just one place. You are not opening different accounts. Is it clear? So then what makes journal different is you have to what? You have to put a remark. So after the transactions, after you have put the debit and the credit entry there, then you have to put remark of, okay, it's telling that manager, this is what I have done. Okay, you open debit, you post cash to debit, you post capital to credit. Why did you do that? So you have to tell your capital, okay, being the introduction of capital at the start of new business. So as an accountant, as a manager, okay, we are okay, yes, right, good. Yeah, capital and cash. Okay, that is the right entry I meant to post. You get it now. So that is just it. Then for the next one, the borrow of Adeyemi borrows 40,000 loan, 40,000 to purchase a van. So what are we doing in this place? So the last class, when we are doing our ledger, I said the first thing is what? Cash and loan, right? The cash is what? Is debit and we credit loan. So in this sense now, what are the transactions two now? What are the first thing you are going to put is cash, 40,000 into the debit, then loan, 40,000 into the credit. Then another thing is to purchase what? A van. So this thing now it's involve what? Van and cash. So you write van, still transaction two. You write van. Let me just take it there. Yeah. You write van. See, they even break it down for you. Loan, payable, assets. So you write van 40,000 naira, then cash 40,000 naira. So what is your remark? So this thing you can just put it to remark. So let me just say I want to do my own now. Adeyemi buys Adeyemi borrows 40,000 naira to what? To purchase a van. So if I want to put remark for my own, let me just say how do I is English that you want to use. So I can just say being amount borrowed to purchase a van, right? So now in this place, you just put the borrowing of what? Cash and what? Purchase of a van. Simple. So transaction 3 now. Can somebody try transaction 3? Adeyemi buys a store for what? For 5,000 naira cash. Can someone try it? If you want to try, please let me know. Unmute your mic if you want to try. Okay, Tamara, so what are we doing to transaction 3? You can unmute your mic.
We are crediting cash and debiting store.
Okay, so what is the first thing you are going to write in our journal?
Well, I don't know the right word to use, but it's like taking money from them, using cash from our cash account.
No. Like what I'm asking is that okay, you want to write this thing in your journal now. See the first transaction that we need. We say cash and capital.
Cash and store.
So what is which one are you writing first? Which one are you debiting?
First. You are writing cash first.
Which one are you debiting? Adeyemi buys a store.
You are debiting store account and crediting cash account.
So I said that the first thing you are going to write is the debit, the transaction that has debit.
So a store you are writing first because we are debiting
yes.
it, and we are writing cash second because we are crediting it.
Yes, thank you. So what is the remark you are going to put?
That's the English now, like the problem.
It's so simple. So Adeyemi buys a market store for what? Cash. So you can just put being purchase of a market store. Being market store purchase, right? Anything. Do you get?
Yes, I get that. Thank you.
So I want to try transaction 4. Then before you can just try it on your own. Adeyemi buys inventory for 18,000 on credit. Who wants to try that? This is how you are going to know your level of this thing. If you don't try, you will not know. So who wants to try? Rachel. Yeah. Eniola. Okay. You can unmute your mic.
Okay. It is 2 transactions. The first one is the inventory, which will be debited, and the next one is purchases account.
Is it purchases?
Credit sales account.
Not sales. Adeyemi buys. Payable. Yes, you are correct with purchases. Payable and purchases, right?
Yes. Yeah.
So what are you debiting?
Inventory.
Explain the last class. Okay. Do you want to use inventory?
Payable will be credited.
Okay, payable will be credited. And what are you debiting?
You are debiting inventory.
Debiting inventory and credit purchases accounts.
Yes, it's correct. See, if you open inventory accounts and payable is correct. But for the sake of this class, inventory, they did not specify the inventory. Do you get? Okay. It's just like they are selling cement and they did not tell us the name of the inventory they are selling. So they are just using inventory. So that's why you just have to use what? Purchases to just categorize it. Did you get it now? So we are opening purchases and what? Payable. So we are debiting purchases. So we write purchases and what? Payable. Being what? So what is our remark? What will be your remark?
Being purchase of.
Yes, you are correct. Continue.
Being purchased of inventory.
On credit.
On credit, yes.
Good. So transaction 5 will be
Being
what
inventory purchase on credit.
Yeah, thank you. So transaction 5 will be Adeyemi pays the supplier 10,000. So what is the account that is involved? Let's talk.
Payable and cash, I think.
Yes, you are correct.
Yes.
Cash account, cash should be debited. Why the
Cash
supplier
will be debited.
credited?
Payable
Why the
will be
supplier will
debited.
be
Payable will
credited?
be
Will be
debited.
credited.
Payable will be debited.
Payables will be debited.
Thank you. Payable will be debited, by cash will be credited because Adeyemi pays, cash is going out, right?
Yes.
So the first thing we are going to write is payable. We debit payable. So you are writing payable first. Payable 10,000. Then you write cash next. 10,000 on the credit side. So what is our remark?
Being payment made to
Payment
supplier.
for supplier of 10,000 naira.
I can't hear you guys clearly.
Being payment to supplier.
I said payment for supplier of 10,000 naira.
Payment made to, not for, made to, or payment to, cash payment to, or cash payment to supplier 10,000. Do you get? Not for. So let's check what I can put. Adeyemi, a payment to a supplier. Do you see? Clear like that. Not for. It's not that you are paying for something, so you are paying to, if you are paying to someone. So the next transaction is what? This is Adeyemi sells inventory for 12,000. So what is involved? Cash and sales. So we are debiting cash and crediting sales. That one is clear now.
Yes.
So the seventh transaction is Adeyemi sells inventory for on credit now. On credit is not, that means sales and what?
Receivable.
Payable.
Receivable. Thank you.
Receivable account.
Yeah. So Adeyemi, the next one, Adeyemi pays.
Number 6. Why are we debiting cash?
Adeyemi sells inventory for cash. Now, the inventory, they did not want to specify what this Adeyemi is actually into. Do you get? Assuming Adeyemi is into cement, they will have put Adeyemi sells cement for 12,000 cash. Did you get now? But they're just using inventory because they did not know what Adeyemi is into, right? So Adeyemi says inventory for 12,000 cash. When you sell something, you receive money. So Adeyemi sells inventory and receive cash of what? 12,000. So cash is coming in, right? You receive money, so your cash is increasing. So you debit your cash. And sales, when you sell, your sales increase, you credit it, sales is income. Is it clear?
You also mentioned when we are paying, when cash is going out, we debit cash as well.
Did you pay? You see now, this thing now, what you said now is you are looking from the perspective of the customer. Assuming you are preparing customer account now, that one is a different account. But now, because somebody pays to you, you receive money and you give out what you sell. The sell, you are looking, don't look at the goods that you sell. Sales means income. Sales now is like, see this sales thing, something now. I used to convince people a lot. The sales is, I make sales today. Sales means income. Like this sales, I make. You want to tell your friend that you sell goods. I don't know what you are into. Let's say you are into clothes. I sold 2 gowns today for 150K. If you just say I sold now, you will not tell them that the cash. Sales means that something coming, you receive something. It's like you receive something. So sales is involved, cash is involved. So what is sales? Sales is what? Is an income. So you credit it. It's not, you're not looking like, okay, you're looking like, okay, should I give it out? Why am I would debit is no. Yeah, something is going out, right? It's not like something is going out, but that thing you receive something, you receive cash. like assuming it is customer now. Customer is the one that is going to what debit his own account. But for us, cash is coming in, we debit cash, then we credit our sales account, which is income. Is there any other question?
Does that mean when we are paying with cash, we will now credit cash?
Yes, cash is going out. Yes.
All right. Okay, thank you.
Welcome. So the next thing, all those things is simple. So sales, we already agreed that for transaction 7, Adeyemi sells inventory for 9,000 or credit. So it is sales and receivable. You have not received cash, so that's why we said it is receivable. So what are you going to do? You debit receivable 9,000 and you credit sales 9,000, being sales made on what? On credit. So that is the remark. For transaction 8, Adeyemi repays 10,000 of loan. So now you repay, cash is going out, Abi. What are we debiting?
Payable.
Is it payable? Remember that Adeyemi borrowed.
Payable.
Is it
Payable.
payable? Are you guys
Receivable.
Payable.
very well? Adeyemi borrows now. Look at this very well. Transaction 8. Adeyemi repay 10,000 of the loan.
It's
Payable. What they be saying payable 10,000.
You are then payable and crediting loan account.
Why? It's not payable.
Is it not cash and
you repay? Yes, cash and loan.
Cash and loan.
You get payable now is saying that maybe you have taken something on credit from a supplier. That is payable. But loan now, he repays loan. Remember, if you remember this transaction, which transaction is that? Transaction 2 borrows 40K to purchase a motor van. So that loan that he took loan of 40K, he repaid 10,000 out of it. He paid 10,000. So that is why Adeyemi repays 10,000 of the loan. So you debit loan account to reduce the amount you reduce your liability. So that's why you debit loan, you credit cash because you are paying somebody. Is it clear?
Okay.
Sure.
Yeah. So the remark will be repayment of loan or anything. Let me see what they put. Yes, a part repayment on the loan. So that is that. And check your pack for it. Then transaction 9, Adeyemi pays the straight supplier. So this one now. So what are we doing for transaction 9? Adeyemi pays a straight supplier 6,000.
Credit card and debit payable.
Thank you. That is nice. Awesome. So credit cash because you are paying the person who take goods on credit from our supplier, and you debit your payables account, being payment of what cash to our supplier or payment of being settlement of supplier, anyhow you want to put it. Then Adeyemi receive 8,000 of the money owed to him by the customer. So transaction 10, what are we putting?
You credit receivable, debit cash.
Debit cash.
Yes, debit
Thank
cash,
you.
credit receivable.
You guys, you are too much. I love it. Thank you. So that's that. So this is how please ensure you write up. That's one thing about a book. You have to write it. It'd be like I will go back to my pack and go and write it out. Write it now. And just when you check it later, you understand it better because we did it together in class. So being the purchase of anything and the likes like that. So then the last this thing is just you are not balancing anything, you are not totaling anything, you're not total. So you just leave it like this. You see the last thing I posted, cash and was receivables, being cash received from credit, and that is all for your what? For your ledger account, your journals account. Is that clear? Is there any question before I will just rush the next section? Yeah, good. So the next one is chart of accounts. Chart of accounts is just like you've done it, but not really. So chart of accounts is telling you that, okay, how do I, if I don't know, people that are working in a finance section in an organization, they will actually know, they will know chart of accounts. So chart of accounts is you saying that for my assets, what code will I use to represent them in my words, in their system to make it easy? All this software, so they use code to represent assets, to represent current assets, to represent non-current assets, equity components, liability, non-current liabilities. So for assets, some company use 1000 series. You be when you're working in accounting section or finance section, please mute your mic. You'll be hearing 1000 series. And when you hear 1000 series, some company use 1000 series for assets, while some company use 1000 series for income. When you hear 5000 series, some company use it as income, some people use it as expenses. So it depends on what your company is using. That is why they will always give you a there's always a note. I don't know, maybe it's only my own company. They will give you like a
Yeah, right.
guideline. Yeah, I'm right. Thank you, sir. So that
Yeah.
is just
Like payable is 2000 series is for payable.
Thank you. You see, so
Mm.
that is just chart of accounts. So that is what chart of accounts is all about. So let's see what they have here. You see now, for chart of accounts in this place now. So the code range for this one now. So for the non-current assets for ICANN now, they said that like from 100 to 199. From current assets, 200 to 299. For non-current liability, 300 to 399, like that. Then from income now, they say 600 series to 699. Now for expenses, 7000 series, 700 series, sorry. She gets. So that is just it. So when you now have they said that non current asset is 100, current asset is what 200. So individual ledgers accounts within the above range for non-current assets. So now in an organization, when you now see 110 now represent land, building now, you know that they said that non-current asset is from 100 to 199. So they will now break it down in your organization. That's okay. This non-current assets, land will now be 101. Building we want 20, warehouse we want 30. So if you now see anything like that, so it will represent, it's not that SAP, if you are using SAP, it is you are dealing with code. You will see 7000 series and the likes like that and the likes like that. So that is just code. Use numbers or this code range to enter your what, to enter all this your non-current, your financial statement line items. That is just what this thing is all about. Is that clear about chart of account? So exercise.
Yes, we are good.
Okay, thank you, sir. So year-end exercise. What is this one all about? Any of these, it doesn't also be recorded in the general ledger accounts so that every blah blah blah. At the end of the period, there is another exercise to perform in order to prepare the general ledger to use in the next accounting period. You may have noticed that profit is calculated after the trial balance has been extracted. Yes, I was expecting that question to that. The profit that we use in our statement of financial position is not in our trial balance. The inventory also is not in our trial balance. That is how you learn. You're supposed to ask why. So it is part
That's
of
our
you.
net profit, Abby.
Yes. So that is part of what year-end exercise. Actually, this thing, I don't know. I'm not like, if not for FA, like I will not see it. Because normal, like everybody knows that okay, your net profit, you take it to your balance sheet, your closing inventory, you take it to current asset. That is our accounting student. That is how we learn. Like so, but in this place, they actually break it down for you guys that you have to do year-end exercise. And the year-end exercise is saying that for the net profit now, you will now go back to the what the ledgers you prepared before. So you've prepared capital account before. So what are the capital items that we have now? Yes, now in this phase now, we know that we have prepared capital account before, and we have our balance BD to be 30,000 in our ledgers. If you remember that we prepare one ledger account. Where is that ledger? Trying to look for the yeah. So our capital here, you see that we have 30,000. I guess I should. I don't know. Capital account. I'm trying to look for the capital account. See our capital accounts now, right? We have prepared it, and we have our balance BD to be 30,000. Year-end adjustment is saying that. Are we together, please?
Yes,
Yes. Okay. So year-end adjustment is saying that you will go back to your, not going back to your ledger. You have to reopen all these things. That's what they did in your textbook. You have to reopen the account that is concerned. Like in this case now, we have inventory. That closing inventory, it will affect something. So you have to open all the account concerns again. Then for the net profit, it will affect what? It will affect our capital account, in the sense that, see, this thing that we were preparing, see, it affects our capital to be what? 31,000. And what affected it? Drawing affects the capital, and net profit affects the what? The capital. So that is what year-end adjustment is saying, that all these things, you take it to your what? You take it to your capital account and go and adjust for it. And for the sales account too, sales account, purchases account, then you know that would deduct our closing inventory. So closing inventory will affect it. So that's why they categorize that one to be profit or loss account. You just open a ledger for profit or loss account. So I'll just go down because of the time, then I'll just explain it. Then you guys are going to get. So that is just what year-end adjustment is all about. So they are just telling us here that this is the balance sheet that we have. Then our closing inventory is 45. This closing inventory affects something. What is it affecting? It's affecting sales and purchases, right? So now they open the ledgers again, because I said that it's going to what? It's going to affect some ledgers, not all of them. So now the inventory, see. So now the inventory, the closing inventory, what is the entry? I said the closing inventory, it will affect cost of sales, and so the closing inventory is also what is an asset, right? So the closing inventory, so they said inventory statement of profit or loss, meaning that this one represents the inventory under cost of sales, inventory that will reduce our what? The cost of sales. So this means we are crediting it, meaning that what? Cost of sales is what? Is expenses. Crediting it means what? You are reducing it. If you debit expenses, you are increasing expenses. If you credit expenses, you are reducing it. So it is balanced with the inventory, meaning that you are, because if you remember the cost of sales we did the other time, we bracket our closing inventory, right? So same thing here. So inventory as assets here, that means the inventory we take to our what? Our financial position, we debit it because what is an asset. So that is just it. Then they are still coming, no? I don't know. Maybe I will still have to use the word this thing to explain. So trade payable and the likes and the likes. All these things do not affect it. So should I open this thing? Well, let me just explain. If you don't get it, then I'll have to explain again. So all these journals now, the two items that we have, the end year adjustment is just net profit and inventory. and we are still dealing with what inventory now. So inventory does not affect all this one, does not affect payable, receivable, capital account, van account, it does not affect it. What does the closing inventory affect? It affected our cost of sales and our what? Our assets. Cost of sales in crediting, meaning we are deducting it from cost of sales. And what are we doing to assets? We are adding it to our assets. So now the open profit or loss, new account, our purchases here. You know, I said that before, we use T format, but now we're using vertical format, a format. It's still the same thing, right? Now, this is it. They put sales here 21,000. It's still the same thing with that the format we did the other time, opening inventory plus purchases minus closing inventory, right? Then we get the cost of sales. I don't know, maybe it's still here. I've deleted it. I wanted to do this one. No, I was not meant to. So it's still, what I'm still trying to say is the line that they did is still the same thing with me saying, it's still the same thing with you saying that so it's still the same thing you saying open inventory, purchases, closing inventory, then you have your cost of sales. It's still the same thing. Then the cost of sales, you take it to, you know, you are going to have sales, and then you take your sales to this place, then anything you get. I used to use cost of sales. Is this? So this is the format for our profit or loss, right? It's still the same thing. So what they did in this place is still the same thing. If they put purchases is what is an expenses, they put it in the debit side. Sales is an income, credit side. This inventory now, you know that this inventory now, this one is going to deduct, if you deduct this from this one to give us our cost of sales. I don't know, maybe you are following. The reason why they put this inventory in the credit side is that it is meant to reduce these purchases to give us cost of sales. How do you now reduce it? If you put it here, meaning that automatically it has reduced this one, right? Is it clear? Did we get it?
No.
So for the T format that they did in this case, this is profit or loss now. You understand that purchases is supposed to be on debit side. Do you understand that purchases is supposed to be on the debit side? Then sales is an income and it is meant to be on the credit side. So I'm sorry, please. So this inventory now, they've opened it before. See the inventory here, credit side. Because what? It will reduce the cost of sales. That closing inventory now. And in this place, the what we did the other time, if you've been writing, where is my notes? You know that we're going to write sales. It's going to be somewhere here. Where is the sales? It's going to be, this is what I'm trying to demonstrate, 21,000. Then cost of sales, our opening inventory here, it is 0. Purchases is how much again? Is it 18.5, I guess? Then closing inventory, you debit it 4.5. So you're going to write 14,000 here. and the difference cost of sales and sales will be 7,000. So it's the same thing with you coming. It's the same thing with you coming to this place and saying that this one that where is it? This one that you credit now, right? Is the same thing with you taking to credit side because purchases will be what is an expenses and it's supposed to be what debit. Why cost of sales now? These are inventory, closing inventory. You see that it's like income. You still have it in your good, thank God. It's like income. Like if not sell it, right? It's still an asset. It's still something you have in your stock. It's not an expenses. It's an asset to you. You credit it. You still have it. It's something that you can convert to sales, and you still get your money. Purchases is like expenses to you. And open inventory is like you saying that this one I'm expecting to sell it. It's still like it can still leave my store, it can still go anytime. That's why it's to be in debit side. But closing inventory is that I have closed my account for this year. I'm not selling anything again this year. So it's still like an asset to me. So that's why you see the inventory as an asset here. It will be on what debit side is an asset. But in this space is an income, like I still have it, I've not said it, it's still income in my account. So it's supposed to be here. And the other way you can look at it is that closing inventory is meant to reduce our cost of sales. In the sense that if you add opening inventory and purchases together, then you less it. You believe me that opening inventory purchases is what's supposed to be on debit side. So closing inventory, it will be on the credit side. So it will negate it. You know, when we are doing ledger, I said that the difference between debit and credit is balanced. So when you put your purchases on the debit side, which is an expenses, so where are you going to put your closing inventory? Credit side. So you are going to get the difference between the two. I don't know, maybe I'm making sense. Did you guys get it like that? Is it clear?
Yes, yes.
Okay. If you are not clear, let me know, please. It's clear, thank you. So that is what they are trying to do in this place. So the sales now 21,000. So 4,500. So we still do 4,500. Now, what is the difference between these accounts? This account now. This if we do 21 plus 4,500, it will give you how much? 25,500. 25,500 minus 18,500, it will give us how much? 7,000, right? Please
Yes,
answer me.
7,000. 7,000, 7,000 naira.
Yeah, it's still the same thing with the net profit that we got the other time, right?
The other time, yes.
Yes, 7,000. So they're just trying to tell us that okay, this thing can actually do it, can actually post it. So that is just it. So now they're actually doing this thing. So what did they do in this place? The next one is you closing they close this thing. So now what they are trying to explain for these sales, purchases, and inventory account is that since you are opening profit or loss account, you know that we open profit or loss depending on financial position. So you are meant to close your sales account. Where is our sales account now? So the sales account we have in this place. Where is the sales account? So this sales account that we have now 21,000. So you are going to close your account like this: profit or loss. This one is saying that see you, I don't have anything in my sales account again. Do you get? So That is why we prepare profit or loss for the period. You are not coming back to this sales again. You have closed it to what? Your profit or loss. That's why we close this sales account to what? Profit or loss account. So you close your sales account to profit or loss account. So when you want to do your profit or loss account, you pick 21,000 naira. Like the way we did the other time, you use trial balance. Yes, it's correct. So they are just telling us that your sales, so where did you close your sales account to? You close it to your profit or loss account. Then purchases too. You just put profit or loss account here. I will use pure hell here. Then you just write how much? 18,000. You write 18,000. Meaning that you are taking into what? Your profit or loss account. So that is what they are trying to explain in that side. Then for loan now, where are you closing into? Equity account, liability account. So this one will be liability, this one will be asset. So that is what they are trying to explain. So for the inventory now, statement of profit or loss, you know that this inventory, the one that will reduce cost of sales. So we have the balance BD. So profit or loss, you close it to what? Profit or loss. You get the inventory assets here now, balance BD. This one you still leave it. Then capital account, our capital account is 30,000, drawing is 6,000. So see the balance BD they got 7,000. So what we did is what is actually correct. So capital account now, so they now brought the what they bring the profits for the period, long process, but they're just trying to break it down. But while breaking it down might confuse people. But then I'm still explaining. Your capital account now, you know that the net profit, what we did in our financial statement the other time, where is it? Is what they are trying to explain. See, this net profit that we yes, is what they are trying to explain in this capital account here. Profit for the period. This is it here. So it's still the same thing. They are just trying to explain it for you in what? Like ledger. So drawing 6,000. So they will still carry this drawing and bring it to this capital in the next account that they will now open for you guys. So profit or loss now. So they now told you that this thing now, this profit or loss, since they brought it to this place, profit for the period. So they already told you that this account or this profit or loss here, we have closed it and we have closed it to what? Capital account. So that's why they open another one here. It's a long process to me. If I'm to open it for you guys, it will just be like 2 sheets. But you're going to understand, but they're just trying to break it down. So now they now said, okay, this profit or loss that we have opened in this place, we have closed it here. This is it. We have closed this account and the balance BD that we have here. This is it. They have closed it. They are trying to tell you that they have closed it to capital account. So this is why they say capital account 7,000. See the capital account here, credit side of capital account, profit of the period 7,000. So that is that. You are still going to see the drawing. No, they will still open another capital account. You will see. Do you see what I'm saying? Capital now. So the drawing now, they close it to what? Capital account 6,000. It's a long process, but it's not needed. Accounting in suites is a suite process. So that is just the playing this thing. Just play around it. Then for your all this one now, the ledger, all this final ledger now, all this one now, they did not affect the inventory. The closing inventory did not affect our bank, did not affect our loan, not affect one, did not affect any of these accounts. So our capital now, what is the balance? The 31,000. What did we have here the other time? 31,000. So it's still the same thing. So asset inventory, so assets still this one. So that is just it too. So they now said you can now open what? General ledger, this thing. So you cannot post it. All these things that you have done now, you cannot post it to what? Your journals. And it's very simple. When you are posting to journals now, you want to post drawings to journal, what will it be? So it will be what? You debit capital and you credit drawing. This is it. Credit drawing and debit capital. So in your journal will be what? debit capital and credit join being amount for drawing. Let me see what they did. Where is that drawing? 6,000. They not even okay. They posted the C. Capital 6,000, drawing 6,000. Transfer of drawing for the period into capital account. So it's just you can just check through your 30 pack when you get home. It's very simple something. And if you don't understand, you can type on the class group and let me know. So this is the assignment. Please do it and send it to the group. So I will check it before the next class. On Thursday, Mr. Afis will handle the class. So next Tuesday, if it's not done, we handle the next class. I will check it and make correction on the group. No need of the next class. So what I want to do, if I see any past question on this, I'll go through the past question. So if I see any question on this ledger double entry principle, the reason why I didn't I checked. So what I saw is it usually leads to cash account, which is cash book account, 2-column cash book, 3-column cash book. And we've not gotten to that side. So when you get to that side, it will be easy to actually solve past question. Because past question, it's really different. Your ledger to 2-column cash book, to 3-column cash book, to trial balance, and that's how it used to go. So that is why all this step you have to take it serious because you build on it. You build on it. If you don't understand this or not, it might not be easy to understand all this 2-column cash book. By when we now get to 2-column cash book, we'll not be explaining contra entry and the likes like that. And if we don't understand simple entry now, there's no way you want to understand 2-column cash book, 3-column cash book. Do you get it now? So please and please do this process question for now. So the requirements is and let me just chip this thing in your. But you are doing an exam, the first thing you check is from this transaction now, if you see this thing in the exam, it looks like just normal double entry posting. It looks like if you want to do this thing, it looks like question on cash book. It looks like question on 3-column cash book. It looks like question on like journal and the likes like that. So the first thing you're going to look at is what is the requirement. So you go to requirements before reading through the question. So this requirement says A, post all transactions to ledger accounts. So you're going to open each of the ledger's account like you've done. And please do it in your notes and send it to the group. Please, at least 50% of the class. Okay, radio 50%. Please, let's do it. If you do it, you are at least you know that okay, I'm ready for the exam. At least 5%, I'm ready for the exam. And don't check solution. If you check the solution, I will actually know. I don't know, I will not know. So post all transactions to the ledger, then B, close off all accounts and extract a trial balance. So you just say prepare trial balance. So prepare profit or loss and financial position. Then you are done with what? Double entry. So is there any question? Okay, I'll do that. I can check the YouTube, Mr. George Benga. Can check the YouTube and the like. So thank you guys. That's the end of the
I hope
class.
you're going to share these workings with us.
Yes, I will. I'll look for ways to send.
The last ones you did share with us.
This breakdown
it's the same, yeah, it's the same thing.
We did ask us to break it down like this exam.
Like yes, you have to break it down. That's how you get your work.
No, this last part that you do, the last part that you do.
No, actually, it's because they are just trying to explain to you. See, when I want to share the working notes, I will send it how I prepare my own to make it easy for you guys. All right, now good night.
Okay, thank you so much. Good night, man.
Good night.